December 6th, 2023. I already released my review for today, or sorry, for the 6th. This is the 5th. I'm doing the 5th now. Um, Notable that when you get a big bar like this, a lot of times you're going to get a second leg. You're going to get a pretty deep pullback too. You notice that we ended up getting a second leg that was pretty similar in size. And a lot of times you just get a straight measured move of the bar, and it didn't happen during the day, but the open of um, today's today's day, which was Wednesday, is right around that measured move up of the bar. So whenever you get a big surprise bar, I would just be wary of the measured move up target and the measured move down, because one of those will get hit a lot of the times. Bar one, bear bar, kind of closing near its low, but it's a reversal bar. It's really not all that strong, and it's got a big tail on the top, so I wouldn't take the sell. It's a lot better to wait for follow through. If you're selling below one, you're hoping that we're just going to collapse, and it's a lot better to start to wait for the collapse rather than just take the sell, because it's so low probability that we just go straight down here. Bad follow through on bar two as expected, and essentially an outside bar on bar three, but tails on three, tails on two, tails on one, very trading range type of open, not really all that strong for anyone. Four, a bull bar, but a tail on the top and a tail on the bottom, so really not all that great. Follow through for the bulls on five, but again, a tail on the top and a tail on the bottom. 3 through 5 is strong enough that we should at least get a second leg up, but you're not sure, how strong that second leg is going to be. We could pretty easily pull back down here before we end up getting that second leg up. So not all that great to be buying the closes anywhere in here. 6 is a bear bar with a decently strong close, but not really near its low. And you know that even if we trade below it, we're probably going to get a second leg up from 3 through 5. So I don't think anything in here is worth trading. 7 is a big bull surprise. There's a lot of times on bar 7, there's a report. I don't know what it was, but the bar 7 you can get pretty violent moves sometimes. And this was one of those days where we got a violent move. If you'll notice, it just ends up being a vacuum test of yesterday's high. And a lot of times you get reversal down from the prior day's high or low. Let's see. Fail breakout, yesterday's high or low. This was the prior day's low, so we got a fail breakout. You can see this isn't what I want. Hold on. I have one that's reversals. Reversals at prior day's high or low. There we go. A couple examples. You can see here we broke through the day's low and then got a reversal up. You can see here we ended up, this isn't as good of an example, but we broke through the prior day's low, tested back, and then got another reversal. But the point being, a lot of times at the prior day's high or low, you do end up getting reversals, and they act as pretty significant support or resistance. And bar 8, I think, is a credible swing short. This is a pretty tight channel up, and bar 7 alone might get a second leg up, so that's a problem. But I think 8 is a reasonable sell, hoping that it's going to be the high of the day. 9 is kind of disappointing follow through. If you sold 8, you probably wanted bigger follow through. I think it's okay to sit through 9 if you sold 8. Thinking that we're at least going to get to the 6 high, right? After you see this, the traders who sold above 6 and scale in are probably going to make money. So you think we're at least going to get here and see what happens. But then you get 10, and 10 closes stronger than you want it. I thought it was okay if we got a bull close on 10, but then your premise is more that we're going to get a second leg down rather than this is the high of the day. So it's not as strong as it could be. But when you get 10, it closes stronger than you want. So I think you have to get out above 10 if you're a bear. And if you'll notice, if you bought above 10, 43.70 or 45.73 was the high, and it needed to get to 45.78.5 for you to make 5 points. And it gets to 45.78.75, which is also testing around the close of bar 7. So if you bought above 10, you were able to make 5 points. If you're a bear, bulls shouldn't, you have a big problem with the fact that bulls just made 5 points in your potential bear trend. If you're a bear, you were hoping that we were going to collapse down and these bulls would stay trapped, and that we weren't, bulls weren't going to be able to make money. And it's concerning that bulls were able to make money on stop orders in your bear trend. So if you're a bull, you're kind of hoping for a bigger second leg than this, but you're hoping essentially you're going to get a couple leg pullback and then a reversal up. You can see the bulls did buy above 10 scalped out because they know 8 and 9 is strong enough for a second leg. And we should at least test the close of 9, if not the close of 5, or the high of 5 or 6. 11, bad, big tail on the top. We'll see what happens. 12 is a big bear bar, or it was a big bear bar, and you can see we test all that resistance, test all that support, but it ends up getting bought up, and we should get a second leg up. I thought the most important takeaway from this was that the bears who sold below 11, you can see they were able to make exactly 5 points selling below 11. If this is a bull trend, should bears be able to sell below a bull bar and make a 5-point scalp on a stop order? They should not be able to do that. So that's a big red flag if you're a bull and you're looking for a swing up here. 13, we test essentially the close of 11. If you bought the close of 11, you're obviously disappointed in 12. Most of those traders are scaling in lower, knowing we were probably going to touch these magnets, and they're getting out around the close of 13. So this is mostly bull selling. As far as selling below 13, maybe, but probably better to wait for follow through. 12 is good enough for a second leg with the big tail, but 13 might be that second leg. And you're right on the moving average too, which is a problem. And this could be one pullback two, so a two-legged correction from this move, and we might get a second leg up. 14, an inside, or not quite an inside bull bar, but a bull bar, but not a great close. Follow through for the bulls on 15. Is it by the close? I'm not. It's reasonable to buy above 15. We're probably always in long. It makes sense. But why are bears making money selling below bull bars? Should be the big question you're asking yourself. And why are all the limit order bears getting out at break even? You can see you don't really have trapped limit order bears. Maybe bears who sold above 14 are trapped on 15, but they're probably going to be able to scale in and make money. And limit order bears have been making money, and stop order bears can sell below a bull bar here and make money. So that's a big red flag for 15. But it's still an okay buy above 15, and it's an okay buy above 16 as well, I think. But again, this just makes me concerned that it's some sort of trading range and not necessarily a bull trend, meaning you can get a quick move down. You need to be fast to get out. Doji bar on 18, I think, this is spike, pullback, and then channel. The channel only lasted 2 bars. You can see the trend line changes. So it's more of spike, pullback, channel, and traders are expecting now that since it's a channel, we might end up going more sideways. So you get follow through for the bulls on 18 and 19, but then you see 20. If you're an always in bull and you see 20, what's really left for you? It's one pullback, 2 pullback, 3. So it's a wedge, and 1 pullback, 2 pullback, 3. So it's a nested wedge as well. And I didn't sell 20 because the channel was too tight. But you probably can. I think it's it's definitely a pretty reasonable sell on the premise that today's probably a trading range day, and if it is a trading range day, this isn't always in bulls are going to exit here, and it's spike pullback channel. So we're towards the end of this bull move most likely, and going to get at least 2 legs sideways down. Surprising follow through on 21 and big follow through on 22 for the bears, but this is somewhat climactic, and this is extremely climactic. So it's more likely here that we're going to get bears exiting shorts than it is that we're going to continue to get big follow through. And if you notice, if you sold below bar 20, you were able to make exactly 15 points. 4581.5 is your so you need 15.5 points. 4581.5 minus 15.5 is 4566. So we had to get to 4566, and the low of this bar is exactly 4566. So if you sold below here, you made exactly 15 points. You didn't have much true risk. It's probably not a bear trend day because this move up was pretty strong. So most of those traders are going to start exiting around 15 points, and that's causing the rally on 23. Bears can exit above 23. I think it's a trading range, so you need to be faster to get out. You get follow through on 24 and 25, but 1 pullback, 2 pullback, 3. It's probably some sort of parabolic wedge on a smaller time frame, or it's just wedge in general. An inside bar on 26, but again, I don't think any of these are really all that good of trades. Outside bar 27, inside bar 28, so it's an IOI pattern. Can you sell 28? Maybe. It's a pullback to the moving average. This is strong enough for a second leg. It's maybe okay to sell below 28, but I'm not going to sell below a doji personally. Big follow through on 29. And you get to the new low. The bears take the sell below 28. Not able to make 10 points, but able to make 5. You can see eventually if they held, they were able to make 10, but pretty hard to pull through all that. And then you get 30. 30, you could cite that this is a second leg trap. So it's 1 pullback 2 and possibly second leg trap on 29 and a reasonable swing buy above 30. But, you're kind of buying towards the middle of the day's range in general. So it's really not all that, as good as it could be. I think you can take the buy above 30, but 31's a bit disappointing in follow through. as is 32. And then when you start to get, 33, it's still a lower high. So I don't think I would want to be long, especially once I got 34. I think you just exit below 34. You have basically zero true risk here. So it's definitely reasonable to exit below 34 and just get out of the trade. Big bear bar closing near its low on 35, but 30 through 32 is strong enough for a second leg. And that's exactly what 36 is. So anyone who's buying up here, disappointed in this, is getting out around break even. 37 is a low two, essentially. Low one, pullback, low two, below 37, but it triggers below 36. So your signal bar is not all that good. And your entry bar really isn't all that good either. We might have to test the 29 close, but I don't think we're going that much lower. And you can see 39 is pretty much the vacuum test of the 29 close. We test the open of the day on 40. And, the open of the day is always going to be, support or resistance, depending from which direction you're coming, especially on a trading range day. And this is a spike in channel, bear trend. But is it really that strong when you're getting all these good bull bars? Not a ton of good bull bars here, but 4 straight bull closes, a really strong bull bar there. A reasonable bull close here. So it's not all that strong for the bears. And you're now at the bottom of the channel line, and it could be 1, pullback 2, pullback 3. So some variation of consecutive sell climaxes while also being a spike in channel for the bears. So I think it's a good buy above 40. You get good follow through, or you don't get good follow through on 41. You get follow through on 41 and good follow through on 42. But I think 42 is deceptive. It's just basically heading back into this tight trading range. A lot of times tight trading ranges get retested. And if you bought above 40, your true risk is right there. You can see you had to have a stop right here. You don't know that going into the trade, but once you get 42, it's pretty clear that the true risk of the trade was right here. And exactly 2 to 1 of your true risk is right here, which is also, if you buy above this high, it's 67.25. So you need to get to 72.75. And you can see here, that's exactly the high of this. So bull, if you're looking at 42, what it really is a vacuum test of the middle of the tight trading range. And it's right where bulls who bought above 40 are getting a 5-point scalp. And it's 2 to 1 of their true risk. So it's pretty reasonable to think you're going to find some sellers here. So I'm not surprised that we get a bad follow through bar at 43. 43, probably buyers below. I don't think we quite got to a 50% pullback. Yeah, depending on which one you used, you could argue we did, but kind of depends on what you use. 43, not a very strong buy above. It's a doji bar. 44, not a very strong buy above. It's a doji bar. It's a high one, technically in a bull trend, but I think this is just a trading range. 45, bad follow through for 44. 46, good bar for the bulls, and you could be hoping that we're starting a tight bull channel up, but with how much bear strength we've had today, I'm not so sure about it. We might end up getting back to the 19 close at some point. It's reasonable to think we were going to get a swing up. But, the magnet for the past couple days, ignore this bar because you hadn't seen it yet. The magnet for the past couple days has essentially been in the middle of this tight trading range, which is around 45.75. And you can see we're in a trading range day and we're oscillating essentially around 45.75. So it's really not all that great to be buying here. 46, follow through for the bulls. 47, follow through for the bulls. So like I was saying, you're now testing towards the top of what was probably a trading range. 48, if you're long, I think you get out below 48. It's 2 legs up. And then essentially, we got 3 pushes to 53. 1, pullback 2, pullback 3, and then 53. But 53 is right on the moving average. It's a small bull bar. I don't think it's all that good. You could also argue it's 1, pullback 2, pullback 3, and then 56 is the wedge buy. But if you're buying above it, 57 is a bit disappointing. 58 is okay, but I think you just have to get out below 59. This is good enough for a second leg, but it's towards the top of the trading range. And it's looking like this is more of just a really shallow bull channel, more so than anything else. So that while this deserves a second leg, the pullback could probably be pretty deep. And that's exactly what happened on 61, deep pullback. 61 could be a second leg trap, 1, pullback 2, and this was probably strong enough for a second leg. Can you sell 61? I wouldn't. I would just wait for follow through. If you get a good follow through bar breaking below the low of the trading range or the channel, which probably started down here, then you can sell. But if you do take the sell on 61, you probably just have to get out during 62 or at the close of 62. You didn't want a doji as a follow through bar. And if you're not out on the close of 62, you definitely have to be out on the close of 63 because, again, these are just doji follow-through bars. It's not what you wanted. If you're selling 61, you want it essentially to collapse and you're hoping we're going to get to a new low of the day or something like that. And we just don't get that. 64, bull bar, but a tail on the top. So really, maybe you could buy it's 2 legs down, one, pull back two, and it's towards the bottom of the, broader bull channel. So maybe it's an okay swing buy, but I wouldn't personally want to take it. Fall through 65, 66 towards the top of the channel. And we just basically went mostly sideways for the rest of the day, oscillated around that 45, 75 price point. For stop orders, I thought 8 was okay, but you probably have to get out, above 10. Can you buy above 10? Maybe, but I don't think it's all that amazing. You'd see traders scalped out. If you did buy above 10, it's probably better to do it for a scalp than a swing. And, when you get this is pretty disappointing. So you probably got to find a way to get out without a full loss on 10, and probably a small profit if you're a good trader. But that's why it's kind of a hard trade, because this is good enough for a second leg. 15 is probably okay, 16 is okay, but if you're taking any of these, you need to get out below 20, which I think is an okay sell. I thought 30 is an okay buy, but you have to get out below 34. I thought 40 is an okay buy, but at the latest, you have to get out below 48, or you could scalp out with 5 points, which is probably fine. It's the true risk conversation we talked about. I didn't personally take anything in here. I don't think it's all that great in general. I think maybe you can buy above this, but I don't think personally you should be taking, newer traders or anyone should be taking anything in there. This is more abbreviated review, but I just kind of wanted to put one out. We said do it yesterday. All right, that's it.